Good morning and welcome. Happy Thursday. Joe and Jason, Patriot Radio News Hour. I hope it finds you well out there. Gene Hackman passed away. So did his wife and his dog. They're saying no foul play, but we'll have to see. He did a lot of good stuff, didn't he? Lex Luthor in the old Superman movies, right? Christopher Reeves. Yeah, and he did so many good things. Hoosiers, the basketball coach, and so he was 95, so I guess that any day above ground is a good one. Let's remember that. Our toll-free number, 800-951-0592. The website at allamericangold.com. Of course, the physical delivery of wealth insurance. It is what we do. Get it put away. It's been a real quiet economic week until today. And the floodgates started to open. It started yesterday with NVIDIA. You know what? I'm going to say this. It was good. Heck, it was really good. Not good enough, right? Because, NVIDIA, you got to be, I don't even know what qualifies as good for them anymore, but it was okay. It was better than okay. Really, it was. It was. I mean, I'm in the wrong business. Do you know that people were upset because their margins fell? And I was like, I wonder what their operating margin was. Yeah. It was 73%. And then NVIDIA said, by the way, it's probably going to be 71%. Yeah, we're starting to get some pricing pressure. But I guess last year they were in the upper 70s. I mean, Jason, come on, man. Can you imagine, we got gold on sale today, and it's $5,555 because we got to run 70% margins. It's just it's hard to believe, but I guess in some of these industries you can pull that off. But yeah, Wall Street wasn't thrilled with that and was discouraged by their gross margin numbers. The good news is so far the DeepSeek effect. Not seeming to impact them a whole lot, but maybe gone are the days where they double and triple sales, and they're starting to, I guess, slow down a little bit. And now, you only can make 71% on everything you sell. That's just horrible.
Well, yeah, 70% margins has got to be a nice place to live, I guess. I mean, it's kind of what Walmart tries to do. Walmart tries to buy for $1, sell for $2, but not every industry has that. And industries that have that sometimes, at some point, it doesn't work out that way.
Those are the types of margins. Those are even worse, better than you. Like when you call like Sean Hannity's guy or Dan Bongino's guy or any of those other, anybody on Fox, Rosalind Capital, right? All those guys. Yeah, that's what they do, right? But they're more like 40%, 50%. They don't even hit you for 70%. I kind of laughed at that, but I thought the earnings were really good. And apparently, like I said, not quite good enough. On the other hand, today we got all kinds of economic data. Fourth quarter GDP, second number. It was 2.3%. It stayed at 2.3%. But here was the scary part. The inflation number exploded higher in it. That kind of, now, I guess you could call it an older number, but that, it's not like inflation's gotten better since, October, November, December, but was much, I think it almost doubled what the first reading on that was, which you would have thought would have drove GDP higher, but it didn't, which is, I guess, showing you the consumer having a tough time. But the number I cared the most about today, jobless claims. Are we finally going to start seeing the effects of layoffs in D.C.? And remember, I told you there really hasn't been a ton of them. There's been talk of lots of them. But this last week, about 10 days now, we've really started to see the layoffs actually start in earnest, and we saw it in jobless claims. 242,000 people filing for jobless claims for the very first time. And again, remember, we've been around, 210, 220. We'll see what next week bring, right? Are we going to go above 250 or 260,000? We'll wait and see. The continuing claims stayed near a 3-year high of $1.9 billion. And we did see a big spike in the jobless claims in the D.C. area. So, Jason, we're starting to see this. Now, the question's going to be, are we going to start seeing, and this is the worry, that in the states now that aren't Washington, D.C., are we going to see layoffs there as they've stopped, right? A lot of grants, a lot of these other things have been stopped. The government is going back and saying, hey, wait a minute, we're probably spending way too much money on this and way too much money on that. Here in Arizona, man, I think every school district in the state, I'm not kidding, they're all closing schools. Yeah, so I don't know, are we in store for much higher layoffs than people were used to anyway? We'll find out that. And what about tariffs? We'll talk about that next. 800-951-0592. A quick look in at the markets. It's been a tough, 2 weeks here for Wall Street. The news was bad enough for the Dow. The Dow's up 400, I think, because they're hoping that rate cuts will be back on the table. That's what they're hoping for. The S&P just turned positive. The Dow is down. NVIDIA is down. Not a lot, but it's down like 3%. And again, like I said, I thought those earnings were really good. This could have been a lot worse. I think the fact that the data was bad enough that really helped the Dow. We got news on tariffs, and we got news on signed home contracts. It's really hard to believe, but we're going to get to that here. The 10-year note, 4.29. It's actually a little higher today. Like I said, the GDP number, inflation was much hotter, but didn't raise the second. This is called the second revision of GDP, fourth quarter, 2.3%. Crude oil's up $1.50. President Trump canceling Venezuela's oil contracts. The Biden administration was allowing Chevron to sell Venezuelan oil. President Trump saying Venezuela hasn't done enough. They haven't taken back enough of their criminals. And he has canceled that contract. So obviously, that's going to be, however many, 500,000, a million barrels a day that are coming off the markets. Gold's down 40. Gold was down all night last night. Then the data came out. I think this is a great opportunity. That's the way I look at it. I think next week's going to be absolute insanity here. But also news breaking here, too. We got so much to talk about. Why was all that gold coming to America? And everyone's guessing, who is it? Analysts in London they don't know because they won't say, but said, don't be surprised if it was the U.S. Treasury. Saying that maybe they had leased out a bunch of that gold, and now needed it all back. I don't know. But that is out there today, which would make sense because it was so much freaking gold. It was so much gold that China couldn't even get any. I mean, that's how crazy it was. But listen, gold right now, $28.76. We're going to have a special coming. Get it and get all that you can. Matter of fact, I would venture to say, anytime gold's under $2,900, buy it all and all that you can. Silver's down 50 cents. I love silver too, right? Take advantage of cheaper pricing, $31, $34. Again, the setup here. We talk about Wall Street needing to be priced to perfection. I think NVIDIA lays out that their report was awesome. At least, if you didn't know anything and you saw NVIDIA's numbers, you're like, oh my gosh, right? Crazy earnings. 78% increase in sales. 93% increase in data center revenue. I mean, come on. This is insane. Not good enough. Not good enough. Get diversified here. Keep telling you. You've got a lot of money in your bank accounts. Call us. Think about yesterday, the FDIC. Let's not minimize the FDIC yesterday. Hey, we'll keep telling you the number of problem banks. Okay, we'll keep telling you. But you know what we're not going to tell you anymore? How much their assets are. Why? Well, the answer is simple. It doesn't matter if you've got 100 problem banks and their assets are only $10 billion. Right? I think there's only one logical explanation, which is, hey, some of these really big banks are getting ready to hit the list. And everybody will take notice. Could you imagine it from one report to the next? The problem bank list goes up by 3, 4, 5, 10 banks. But yet the assets go from, 20 billion, 30 billion to 300 billion, 400 billion, 500 billion. I think that is what potentially could be getting ready to happen. So be smart here. You got big IRAs. You've done real well. Take a part of that, roll it over into a gold and silver IRA. We can help you do that. Call us, 800-951-0592. So first, let's start with home sales. Let's start there. Pending home sales hit an all-time record low. Now listen, they've only been apparently doing this since 2001. So this millennial never, ever have pending home sales been this low in the month of January. Pending home sales fell 4.2% in December, fell 4.6% in January. Year-over-year sales are now down over 5%. Remember, last year, home sales were like 1994 levels. And it's down even worse. The South was the biggest decliner, down 9%. Unfortunately, Jason, the median home price still went up. By the way, hey, it was cold. Jason, it was a cold January, so maybe, hopefully, fingers crossed. Right? That was the reason why it was so bad, but that's just an insane number. It's hard to imagine home sales. So this one is the one that actually counts, right? Because, we have new home sales, existing home sales, but this is pending home sales, means someone's actually signed the contract, right? Someone's actually signed the contract. Yup, I'm going to move in. You've got your closing date, and you're getting ready to move here, Jason. I don't know, but home prices, it defies all logic, right? The inventory continues to skyrocket, and at the same time, sales continue to collapse, but prices keep going higher.
Yeah, I've said ever since COVID and all that money printing, and we had the inflation, I've said that you can have a housing crash in value. You know, if the housing prices go up 1%, 2%, 5%, Joe, but inflation's running at 10, your house is not keeping up. It's just like wages, right? It's stagnant. So you could have housing prices going down 5%, staying the same or going up a little bit. And if inflation shows that the price of everything else is going up, then your house is actually going down in value versus everything else. I mean, look what gold's done over the last year plus. The housing prices haven't been doing that, and gold is always a barometer of inflation. So your house price could stay the same this year, and that's actually your house going down in value because you sell your house, you got money to do something with it, right? Well, over the last several years, housing prices haven't really done a whole lot. They've gone up, but not gone up as much as a loaf of bread or a carton of eggs, right?
And I'll say this, just to give you an idea, 5 years ago, so go back to 2020, you know what the median pending home was? $200,000. Yep. $200,000. Now it's $400,000, right? I mean, it's insane. It's insane when you think about what's happened, and no end in sight. And then this morning, okay, we're getting a lot of clarity now. Donald Trump saying March 4th. So tomorrow is the last day of February, the 28th. Then you got the first, second, what is that, Tuesday? The tariffs on Mexico and Canada are going to go into effect. But wait, there's more. The 25% number appears to be the number. In addition to that, Donald Trump's going to impose another 10% tariff on China. So China's already at 10. Now they're going to be at 20. Mexico and Canada are going to be at 25. Another reason why we're probably going to see increased energy prices, 10% tariff on Canadian energy. So oil and whatnot, but the new news, a 10% additional tariff on the Chinese, and the start date for all of these will be Tuesday, March the 4th. Part of the reason why, we had this little bit of profit-taking gold sell, the dollar just went skyrocket crazy, right? Because people are like, what? Wow, right? This is incredible what is going to happen. And of course, we said, listen, this is part, if you look at the budget that they're trying to pass, Jason, this is a big part of their plan as far as getting revenue in, and the tariffs, by the way, he also let everyone know who's next, April 2nd. Look for major tariffs against the EU. Donald Trump yesterday saying, hey, I'm going to start with a 25% tariff on all automobiles out of the EU, plus others, these reciprocal tariffs, that is, as he likes to call them. They will start April 2nd. So, Jason, we've got start dates for Mexico and Canada, which is going to be March the 4th, 20. I really thought maybe it'd start at 10, but it looks like it's going to be 25%. On top of that, another 10% on China. Then on April the 2nd, so the day after April Fool's Day, Donald Trump is going to be putting in what he calls the reciprocal tariffs. These are going to be certain tariffs like, hey, if you've got a high tariff on our autos, we're going to have a high tariff on your autos. If you tariff, I don't know, whatever, this widget, we're going to tariff that widget. And all of those are going to come April 2nd. So, Jason, this is a lot of data out here as these plans are coming to fruition. And I really think a lot of people thought that Trump was going to, kind of bluffing, hey, I'm going to make these big comments, but I'm actually not going to do it. He's doing it. And let me tell you, it's in the budget. They want to collect $800 billion worth of tariffs. I mean, they're coming.
This down day in gold might not last too long, I guess, huh? This might be the only day you got. We can see it go back up tomorrow.
Oh, boy. I will say I think we get some inflation data tomorrow as well. The inflation data in that GDP report was not very good. And then on top of this now, we got to just be honest about it. Things are going to cost more. There's no doubt about it. We know how much we import. There's no secret there. I mean, we're running trade deficits approaching $1 trillion. Seriously, almost $1 trillion last year was the trade deficit. A lot of product that comes to the United States getting ready to get hit very, very hard. Patriot Radio News Hour will be back after the break. 800-951-0592. The tiny specials continue. We just don't know who will call next. The reason why they're so limited is it really is reliant on the seller selling so you can pay less. In other words, instead of having to buy from our wholesalers, we buy from our customers and we can offer better deals. But this is a very small offering today, but the pricing is incredible. We've got $15, $20 gold pieces. Remember earlier this week, I think we had, I forget what the number was. We had 20 of them, and they sold out in the first day. Well, we've got 15 of them today at $27.95. So the same price that we had them earlier this week. They won't last. I know you want to hear the rest of the show, but they won't last. And then we've got 60 1/10 ounce American Gold Eagles. Now, our regular price is $350, and we're cheaper than APMEX, JM Bullion, all those online guys at that price. Forget about that price. I've only got 60 of them. These are the golden dimes. 1 through 9, $325. 10 or more, $320. By the way, that puts us at, on average, just average, about $50 a coin less than pretty much what anybody else out there on 10th ounce American Gold is. Jason and I, we all looked around. I think we found one place was like, if you bought a whole roll of them, you got them at like $340. Right? Nah. 1 through 9, $325. 10 or more, $320. And then, of course, obviously, when we talk about, spot here, $28.75. We got some 20s, a small handful of 20s at $27.95 at 800-951-0592. Another little disturbing sign yesterday. But it's all of a sudden, remember, the Dow was up yesterday and then it's kind of didn't make it. The yield curve is starting to reinvert again. Remember when it unreinverted, we said, hey, 3 to 6 months. Well, we're on month 5. And all of a sudden, let me just say, the 3-month note yields 4.30. The 10-year note's at 4.28. The 6-month note, 4.32, right? The 10-year note at 4.28. It's not, full inversion. Just to give you an idea, that 2-year note, which is the one they really watch, that's at 4.10. So we still got some ways to go. But, Jason, that's an indicator. The bond market is saying, hey, guys, I don't know what you're doing, but it's starting to get shaky here. We're starting to get nervous that a recession is coming, and you better fix it. Otherwise, we're going to see an even bigger inversion. And I think as this data comes out, it's going to be one of these hard things to accept, which is going to be prices still going higher, and yet the economy isn't going anywhere. That's going to be a tough one to swallow.
What is the price on those 10th ounce? I was just getting some feedback. We have the 10th ounce and we have 20 liberties. I'm sorry, Joe, because I have somebody asking.
So 10th ounce, 1 through 9 at $3.25. 10 or more, $3.20. Now remember, we only got 60. That's all there is. And then on the 20s, that's $27.95.
Got it. I was just looking over. Sometimes people will text my phone and, wait a minute, I didn't get the price on that. I was like, well, I was pretty sure it was $3.20 if you buy 5 or more, $3.25. And like Joe said, those prices are really good. We don't do 10th ounce very often recently, so if you can get them at this price point, this is a good place to go, because we don't know if gold is going to go down more or go right back up. It sure seems like these pullbacks are short-lived, right, Joe?
Well, and how about this? The Department of Agriculture is saying egg prices to jump another 40%. Are you kidding me? The Trump administration out this morning. They're going to spend $1 billion, and they're going to import between 70 and 100 million eggs over the next 60 days to try to drive these prices. And again, I don't think this drives them down. This may at least temporarily offset the price. But the Department of Agriculture says, get ready to see another 40% increase in eggs. I know Turkey in the U.S. hit a deal. They're going to send us, I forget, so it's an outrageous, it seemed like an outrageous amount of eggs, but Jason, it just doesn't stop, right? They killed all the egg-laying chicks and then had no plan on, hey, how are we going to get more chicks, right? I mean, you got to have a plan. So the Trump administration, they're going to try here. But again, all the market's going to see is more demand, right? So that's going to be less demand globally, which it's good and it's bad. It's good short term, maybe a little counterproductive longer term.
There is a lot of attention on the chicken industry right now and the whole bird flu thing and burning up whole flocks of chickens and egg prices going up. There's definitely a lot of attention. I mean, there's a lot of other industries that have interesting stories, but man, there's a lot of attention on birds and eggs, chickens and eggs right now.
Well, and when you think about what's been happening when we look at the price points, you're seeing a lot of the bigger restaurant chains, they're now imposing a 50-cent an egg surcharge. We told you about Waffle House did it, then Denny's is doing it, right? It's just kind of one of those things. I mean, does that show up in inflation? Does that count, right? Or is that a way to, we'll make inflation look a little better because we'll call it a surcharge instead of raising all the prices on all the breakfast stuff out there? I guess at what point does a surcharge become a regular price? I guess we'll have to wait and see. Patriot Radio News Hour. Listen, we got 2 lines open. 800-951-0592. A very small amount of 20s and a small amount of 10th ounce. Get them while you can. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. Get them while you can. I don't know that these 10th ounce. I don't know how much longer they're going to be with us here. We had 60 of them. The price is ridiculous, but that's what we do here. 1 through 9, $3.25. 10 or more, $3.20. Give you an idea of the price and how good it is. Cost is $317, so you're basically buying them at cost. I mean, can't beat it. $20 gold pieces. We only had 15 of them, so they won't be here either. $2,795. And I'll tell you what, if anybody wants to buy 25 rolls of dimes, I'll put them back on sale for you today at $120 a roll. But if you buy 25, we'll take them to $115. $115 a roll on rolls of silver dimes. If you buy 25 rolls, that's $2,875. We probably can do that 2 or 3 times. So you got another opportunity on that pullback in silver to take advantage of it. 800-951-0592. So already the auto industry in full freak-out mode right now, saying that the 25% tariff on Mexico and Canada will add $9,000 to the cost of a full-size SUV assembled in North America. Got to remember now, China's up to 20%, so I don't know if that was factored in there or not. A pickup truck, $8,000. Electric vehicle cost, over $12,000. Canada, the biggest supplier to the U.S. of nickel, which is an important element when we're talking about automobiles and electric stuff. And again, haven't seen anything about silver being exempt. Remember, 83% of all the silver that the United States consumes is imported from Mexico and Canada. And I haven't seen, so far anyway, the only exception I've seen was they're only going to hit the oil industry at 10%. I haven't seen anything else. So this is going to be, again, we're talking about how this may affect how the country is going when we talk about the bond market reinverting. This is probably one of the fears, okay? Does this now already, let's face it, automobiles were already expensive. Are we going to see, this tells me, here's what this tells me. I think you're going to see used vehicle prices jump again. That's what I see, right? Because if these new vehicles are going to get even more expensive, then you're going to see the used vehicles get more expensive. And again, I hope these guys are overestimating, because you never know, right? They may be wanting to set a big example, but even if they're overestimating a little, you know, they're talking, essentially they're saying, hey, every car's going to be about $10,000 more. Oh, okay, well, maybe it's only going to be 8 or 7. That's a lot of money. That is a lot of money. We'll see what else comes out of this. So far, that's the first one that we've seen, and worries now coming out of Detroit. The big 3 automakers really trying to figure out what to do, right? You know, and here's the thing. I get it. Hey, bring the jobs back here. Bring the jobs back here. Is 25% enough? I don't know. You got to remember, we pay our workers a whole heck of a lot more than they do in Mexico. And I don't know about Canada, but Jason, it's hard to imagine inflation not being drastically impacted by these tariffs, because this is something, listen, we haven't seen these types of tariffs before. Remember Trump's first term, he hit China with a tariff, right? But it was, hey, it's on this and it's on that, and it wasn't on everything. This is much different. This is very much blanketed tariffs. Obviously, our top three trading partners, Mexico, Canada, China, right? They're the top three. And they're at 25, 25, and 20%. And then in another, listen, that starts Tuesday. Another one, April 2nd, less than 30 days later, all of these reciprocal tariffs come into effect, and most of those, Jason, will be from European countries. And Donald Trump's already said, listen, autos, pharmaceuticals, computer, right, tech stuff, all are going to be on the list. So people better dig in here. This is going to be interesting to see how this shapes up as the layoffs from government are starting to pile up here. What are going to be the effects? And this is going to be the key. I think if it stays isolated to D.C., maybe we can survive it. But if this thing spreads, and a lot of people are saying it's going to start spreading because D.C. is giving less monies to the states, then all of a sudden we've got a really interesting situation in the economy. And I think that's why the bond market's a little jittery today. Call, get it done. Do it today. Understand where we're at. 800-951-0592. Final segment coming up. 800-951-0592. I think we're down to the last 15 10th-ounce gold Eagles. Remember, if you buy 10 or more, they're $320, 1 through 9 at $325, and it goes without saying, we are so much cheaper than anybody else out there. Pick them up. There's still some $20 gold pieces left. I don't have a number. The girls are on the phone, but I've got a few left. Don't let this price point pass you by. $27.95 on the $20 gold piece. Even with some profit taking it up, gold right now is down $35 to $28.80. I mean, you're still buying at $85 under spot here. Quit messing around. 800-951-0592. What's that, Jason?
On those $20 Liberties, you're only about $8 over melt. You're essentially buying it for melt. If you melt the $20 Liberties, you could melt yourself a gold bar and you'll lose no money. So usually on these pre-33 gold coins, there is a premium even in these days, but the premiums have been low enough that here you are buying $20 Liberties essentially at melt, and you got 10th-ounce gold Eagles is about as close to spot as that we've ever sold them, Joe.
Yeah, as far as cost, as close to cost, that you can see out there. And let me tell you, I'm really concerned about what the auto companies have just said. One of the big improvements, remember last year with inflation, we got down to 2% for 1 month. Do you know what the biggest factor in that was? It was used vehicle prices. Because remember COVID, the car lots were empty, so used vehicle prices had skyrocketed. And then the cars came back, they went back down. Well, they've been rising. Used vehicle prices have been rising for the last 4 months. How do I know? I got a guy, I read on my back shop. To a guy that's him and his brother, they had a small wholesale business. So they tell me all the time. And now you're telling me what new cars are going to add $8,000 to $10,000 per car? Of course, that's going to make the used vehicle prices go higher. And Jason, this is something where I see here higher inflation, and I never thought I'd see the day. Are we going to see the Fed cut rates with inflation going higher? It may actually happen. Everything in your heart says no, don't do it. It may happen.
I said, I think in 2023, remember I told you, Joe, I thought in the future we would see, inflation going up and rates. Well, you know what? I saw rate cuts going up and inflation going up, but I also saw the inflation going up under either situation because what are you going to do, right? What are you going to do? And you're either going to protect the markets and try to keep it from crashing, and that's exactly what Trump wants. Trump wants inflation, and he wants the markets as stable as possible. So lowering rates with inflation is where we're at. I mean, that's essentially what the tariffs are saying. The tariffs are saying you're going to pay higher prices.
And I think this is going to help Trump get that budget passed. The worse it gets, the better chance. Like you said it, you better pass it. You better pass it.
Horrible budget. The horrible budget.
Well, the Dow was up 400. Now it's not even up 200. The S&P's down 15. The Nasdaq's down 160. Woo!